Hello again, everyone. It's Vince Moore from TradeWinds.com, and this is our update for January 22nd, 2017. Hope everyone's having a great weekend so far. Let's take a quick look at how the markets finished off last week and what we have to look forward to this week. So on Friday, the stocks closed the week on a high note. The Dow bouncing back a little here. It was up 95 points, while the S&P 500 was up 7.5, and the Nasdaq was up 15. The Russell also posted a gain of 6. Now I'm going to come back to these charts in just a couple of minutes, but before I do that, I do want to remind you to keep an eye on TLT. TLT is about to make what I think is going to be a significant move. If we look at the daily chart here, this can go either way, but right now it looks like we're in for more downside, and I'll explain as we go through this. But right now you can see that we bounced back nicely and have come back to retest this upsloping 20. Now, we did close below it on Friday, which in and of itself isn't that big of a deal. What is a bigger deal is the weekly chart. If you look at this right now, there is significant momentum lower. Look at the slope of that 20-period moving average. A very, very significant downward slope. And the bounce back here didn't last long, could not even make it back to the 20-period moving average. But in addition to that, gave us this huge bearish engulfing setup. Let me zoom in for you. You can see the body of the red candle here that completely engulfs the much smaller body here just before it. And this is what is known as a reversal signal. Now, the key here is to mark the low of this weekly candle and wait for a trade below that low. Now, last week's weekly low was 119.29. So a move below that level, and we have what should kick off a much more significant move lower. And if I zoom out here and look at where we could potentially go, the first target here, even if we look way back to our left here, there's a significant level of support right around 115. So that should realistically be its next test, which is about a $5 move from where we are now. So, not insignificant, but a nice little move there. But if we don't hold that level, which is significant, then the real pain kicks in. And I think we not only head back to these lows near 101, I think we could head much lower on TLT. So this is definitely one you want to keep on your watch list and keep an eye out for a trade below last week's low. Now, gold here on Friday moved up slightly, just about 9 points or so, but it is in itself ready to test this 20-period moving average again. And you can see again, if we look to our left, there's some resistance right in this area. So it is about to have a crucial test right now here. If it rolls over, I think 1046 is pretty much a given near term for gold. And crude on Friday was up just over a point and actually had a bullish engulfing setup itself. So keep an eye out for a trade above Friday's high here on crude to kick off more upside here. The high on Friday for crude was 53.67. So we'll keep an eye on that. Now, before I let you go, I do want to just bring up a page here, Market Watch. Now, I like Market Watch. I go to that page for news quite often, but I thought this was interesting. And I get asked the question very often, can we use news to trade? Can we trade off news? And can the news actually tell us where the market is going next? Well, I just want to point this out. Look at these headlines right in here, okay? And let's read through them. Jim Rogers says dump stocks if Trump launches trade war, okay? So it makes you kind of worry a little. Trump is set to unleash stock market anxiety. Again, any uncertainty or anxiety should cause the market to go down. Then Soros says Trump uncertainty will cause markets to falter. At this point, if you're thinking about using news to trade, you're thinking the world's just about to come to an end here. And then you get to the next headline, which says why this bull market will keep going, right? And bulls sit on their hands as Trump promises America first and Barron's Manual for a mixed up market. In other words, I don't believe you can use news to trade with or trade off news. There's going to be many different opinions, and there's going to be articles on various topics, but obviously with catchy headlines. And I'm not bad mouthing MarketWatch in any way. As I said, I use them. I like the site. It has nothing to do with MarketWatch, but no matter what news outlet you go to, you're going to see headlines like this. And bottom line is, you should keep things simple, monitor your charts, and take your signals off your charts. Forget the news. It's more entertainment than anything. And you should continue to keep an eye on your charts. What we have here with the index charts is we still have this range, sideways range. We have not broken out of the high or the low. So we continue to consolidate sideways. And until we either break out of the high or the low, it is what it is, and we're going to have to wait it out. Here's the S&P, same thing. Now, the Russell here on Thursday had closed below these lows, okay? It did that, but there was no follow through. In other words, we need to mark the low of that breakout candle and wait for a trade below there to confirm the breakout. We do not have that yet. In fact, we have what is known as an inside bar formation. So you mark the high of Thursday's bar, you mark the low of Thursday's bar, and wait for a breakout one way or the other. Okay? But again, forget the news, use it as entertainment, keep an eye on your charts. They will guide you every single step of the way. All right? That's about it for now. Enjoy the rest of your day, and we will see you on our next update.